All right, you're welcome. Yesterday, I did ask a question for those of us who have specific questions to ask. So we could go through AQZ more or less from the scratch. I know Papa Pips has done that already. So most people were talking about the bank and how to actually find entry. And I'll be covering that today. Shortly after doing a very brief recap of what AQZ is for the benefit of those who are still lost. All right, so there are some documents you'll find in the file section. If you don't know how to get to the file section, just click the header of the discussion group, takes you to this interface. You go to your file section and you find them here. I dropped a picture yesterday, something to aid you on how to, yeah, that's it here. So these are the items. Number one, where you should start from is acquisition zones, basic setup and mechanisms. Then you can go to the prophetic candle, and then you can look at Beat the Bank. All right, to help you understand acquisition zone basic setup, there's a PDF document, AQZ New Forex Wave. And to help you understand prophetic candle, there's also a PDF document there that you could go through. So have those PDF documents open here. This is that for acquisition zones. So for those of you asking, how would you set up your AQZ on MT4? It's very straightforward, right? Just follow this. Let me magnify this a little. Follow this on your MT4, and you have your AQZ on your MT4. Let's see if we can do a quick example, even though we're not finished it all. Just a quick example. Which should I use? Infinox. All right, so let's call up Infinox and see. All right, so here we are, and I want to do my AQZ here. So let's quickly don't show grid, the colors. Let's make our bar up deep blue, bar down light blue, bull candle deep blue, bear candle light blue, something like that. Okay, so we have this now, and I want to draw my AQZ fib. If I pick up my fib, traditionally it looks something like this, right? So I'll highlight it, and you can do this on mobile, you can do this on your desktop, all the same. You go to Fibo properties. Of course, if you want to change the color to something more visible, you might want to change that if you feel like. Here is where you're going to fix all the details. So you have your PDF. You have your PDF here. It tells you you have 0.0.5. Just put in the you have 0.5. You come here and change your level to 0.5. The next one is 0.625. Change the next level to 0.625. Of course, the description, there's also a video that gives you the description. If you want to have them, you could have them. Then we'll have 1. You have your 1 there. You have negative 0.5. Here will be negative 0.5. You have your negative 0.625. Negative 0.625. I won't do everything, just so you can have a feel. 1 and 1.5. Negative 1. Negative 1.5. As you do that, you also change the description. In fact, you can make the description exactly the same thing. In any case, you can make this 1, and this is negative 1.5, but we'll have descriptions for all of those things you can use. All right, so let me clean up this last one just for now. If I say okay, here you see my AQZ fibs, right? So you see my preferred entry. Here's my preferred entry. This is my TP1, and I was just about creating TP2 down there. These are like resistance points. They are midways. They are also TP points, right? So that's how you do your AQZ on your MT4. If you are somebody who is addicted to MT4, you want to draw your MT4. So let's say we're drawing our AQZ off of this bullish engulfing here. Then I'll just get my fib and pull off from my bullish engulfing up to that point. And now I have my AQZ fib set. The challenge with MT4 is that you can't snipe this thing to the tip of the wick. So sometimes you might lose out on error due to parallax, right? So that's that on fixing your fibs on MT4. I think I've resolved that question. So let's move on. All right, so go ahead with this document. It's going to help you basically understand how to treat your fibs. And there are 5 candlestick patterns that we use in AQZ. The first 2 are very, very common, which is the bullish engulfing and the bearish engulfing. At some point, I think at the beginning of this year, I held a webinar, a 3-day webinar, where I got some mentors angry because I basically demystified some of the things they were using to make money off people. And I mentioned that an order block has been existing from time immemorial. If you have the book, Candlestick Bible, you discover that there are basic 4 candlestick patterns that make up every other candlestick pattern. The first one is the tweezer. The second one is the engulfing, which will be bullish or bearish. The third one is a hammer. And the fourth one is a variation, is the inverse, or the bullish engulfing is an inside bar. Every other candlestick pattern you want to mention derive its origin from those 2, from these 4, right? If you have a hanging man, what we'll call a doji is just a revised form of a pin bar, which is a hammer, right? So you have a shooting star, you have a gravestone, they are all forms of dojis, right? So if you understand candlesticks properly, I don't care if you still love to use indicators. Candlesticks is where indicators interpret candlesticks. They print after candlesticks have happened. So candlesticks are like the main thing, then indicators just give you confluence. So here are the 5 candlestick patterns you want to look at, or basically there are just 2 candlestick patterns here. So there are 5 variations of 2 candlestick patterns. The first one is a bullish engulfing, which is an engulfing candle. The second one is a bearish engulfing, it is still an engulfing candle. Then we have the violated bullish and violated bearish engulfing, they are still engulfing candles. Then we have the inside bar, which is the reverse part of an engulfing candle. Right, so here we have an example of what a bullish engulfing looks like. And to the right-hand side, we'll have an example of what the bearish engulfing looks like. The bullish engulfing, you should have a bigger candle to the left, to the right of your screen, which engulfs or is much more bigger than the candle to the left. And to make it sweeter, it should be a candle of an opposite color, right? That's the basic definition of an engulfing candle. Now, when you have an engulfing candle is a take action now candle. When you have an engulfing candle, it tells you take action now. It's more or less like a buy now candle. Once in a while, the engulfing candle will get violated. It gets violated. So we have what we call violation of violated engulfing candles. This was a bullish engulfing candle. If you trade order blocks, you would have been anticipating price to retest this level, and then you buy. But price violated it. Now, slightly different concept with AQZ. For guys who trade order blocks, you would mark out from week to week as your order block. For AQZ, you mark out the body. You put a line flush across the body. So for a bullish engulfing, it will be violated when price closes beneath this body, right? So for those of you who trade ICT, this will be like a mitigation block, and this will be like a rejection block, right? So price violates this level. We say the bullish engulfing candle has been violated, meaning our bias is no longer bullish, but has now been turned to bearish, right? Ditto for a bearish engulfing candle. Now, so there's a big difference between violations and invalidations, and I'll explain that briefly before we move on, right? So we're done with that. Now, the next one is an inside bar. So the inside bar is like the mirror image, right, of an engulfing. So for an engulfing, you have the bigger candle to the right of your screen. For an inside bar, you have the bigger candle to the left of your screen. So we have the bigger candle to the left, the smaller candle to the right. This is like a reversed bullish engulfing somehow, right? Now, for an inside bar, you mark it up from week to week and wait for price to close beneath the week for signs of bearishness, and for price to close above for signs of bullishness, right? So this is a bearish inside bar because price closed beneath. This is a bullish inside bar scenario because price closed above. Again, if you go to candlestick patterns, they may call these different kind of names, something harami, whatever harami. Nobody pays us for knowing the names of these things, right? These are the applications. So this is inside bar. I'll wait for breakouts in this instance to take our trade. Typically, if we're taking our trade off this point, our stop loss will be above. In this case, if you're taking your trade off this point, that is price broke out, you are waiting for a retest to go, your stop loss will be beneath. Okay, the next candlestick pattern. All right, so we're done with the candlestick patterns, basically. Right, so we will now go quickly to discuss invalidations, and then we'll now go back to the chart. So here we have, I magnify this a little more. Here we have an inside bar, right? We have an inside bar, and price broke above here. When price broke above, it invariably gave us a bullish signal. This was a breakout. When we draw our AQZ fibs, we have what we call the AQZ block. AQZ block. And the AQZ block is this deeper blue region from here to here. It's divided into three: the upper part, the lower part, and the preferred entry. In a bullish scenario, anywhere in the upper part here is a buy signal. In a bearish scenario, anywhere within this lower part is a sell signal. Aside that, if you have a breakout in here, anywhere within this bullish side is a buy signal. If you get a BTB within your buy region of the AQZ block, you should consider buying. You should consider buying. Somebody said audio lost. Is that true? Everything seems okay from my end. Someone else could confirm, please. All right, for you. Okay, thanks, Dan. So now notice, if price for any reason pulls back to this region, we will be looking for reasons to buy. It's still in the region. In fact, this is our preferred entry. Why do we call this the preferred entry? It reduces our stop loss and invariably increases the lot size we use. And it also helps us get equal risk to reward ratio. The distance from this point to this point is equidistant from this point to this point, right? So this is TP1, this A1, we'll call it TP1, and this A2, we'll call it TP2. Now, if price, for any reason, closes beneath your preferred entry in the same time frame upon which you discovered or you drew your fib. So if I'm drawing my fib on the daily, I want price on the daily to close beneath my preferred entry for me to have what we call an invalidation. It's different from a violation. It's an invalidation, meaning that my bullish signal has been invalidated. I will now be looking for sells. All right? I believe I've been able to clear up that part for those people who okay, see this. Here we have a bearish engulfing. Usually when we fib the candle to the left. We fib the candle to the left, right? We fib the candle to the left. But when we're dealing with, we fib the candle to the left. So let's move on. In this case, when price came back here, we would have been anticipating a sell, but price closed above. That is a violation. The candle that caused that violation is called the violation candle, right? The candle responsible for the violation is called the violation candle. When we have a violation, it simply means we are no longer bearish. We will be anticipating buys when price returns to our buy zone. In this case, price returned straight to the preferred entry and then went off to hit our TP1, TP2, came back again towards buy zone, and then rallied up for like TP whatever, right? So please, you need to have that at the back of your mind. So these are examples of invalidations. And with AQZ, you could get invalidated a couple of times before price would take a direction. When trading this strategy, as with every other strategy, you have to be comfortable with taking a loss. If you're looking for a strategy that will not have a losing trade, then you need to get the Twitter handle of the President of the United States of America, so that when he's about to make a tweet, then you take your trade. That's the only time price might move and you hit your TP very quickly. In every other strategy, you would have some losing trades. What most traders have is a mental block when that affects their psyche. When they have 1, 2, 3 losing trades, they simply melt away. And then, sometimes they lose their guard and begin to trade outside of their trade plan. What AQZ does is that it gives you the confidence that you have about a 90% probability to recover back anything you've lost. And I'll show you an example from what we have on the screen. This was a bearish engulfing candle. Price came, and if you were trading off limits, you would have set your limits here, and price would have hit your stop loss. Now, if you don't trade limits, you'll most likely be trading BTB. You might not have gotten an entry here. But let's say you trade limits. So it hit your SL. And this candle became the violation candle. Now we're looking for buys. Price came, bought up a little, but then went down. In this case, you might not have hit your SL, right? Because price did not get to the end of the AQZ block. But you also would have scratched out this trade. You would have cut off this trade without it hitting your stop loss, simply because price has gone below your preferred entry. This candle came below your preferred entry, which was your initial bias. Your initial bias was a sell. So the candle that gave you the reason to want to sell again, we say that that bias is revalidated. Now we're looking for sells. Price traded back to preferred entry. It did sell for a while, and then it invalidated again. So now we've had 1 losing trade, 2 losing trades, 3 losing trades. Now we've lost the 3rd one, and now we are now long. Price came back to preferred entry. We got in. It gave us TP1 and half. If this hasn't recovered everything we have lost, it will recover a substantial amount. If you do your risk-reward ratio the way it's supposed to do, or if you adopt the asymmetrical risk-reward ratio I explained some time back, you should have no problem with having 5 back-to-back losses. Now, after price hits TP1 and half, it basically melted and revalidated. Again, once it really validated our sell, again, preferred entry, boom, TP1 to the other side, right? TP1 to the other side. And then now we've officially recovered everything we've lost. Last week, I explained how you could avoid consolidation, not totally, but you could avoid it to a large extent if you look at the individual currency futures. But I won't be doing that today. So I've basically gone through AQZ for everyone. We will now go and look at Beat the Bank concept, right? So yeah, and by the way, you can trade AQZ on crypto. I've been doing that on crypto. I'll just give a hint and then I'll move on. So on crypto, I use the H4 prophetic candle and the D1 prophetic candle. Again, if you don't understand what the prophetic candle is, we have a PDF tool to help you, right? So the prophetic candle is just one candle that usually you usually find on your screen like once a week or once in 2 weeks. You find an arrow pointing to a particular candle. If the arrow is pointing downwards and is most likely red, it means your bias is bearish. If the arrow is pointing upwards and most likely blue or green, your bias is bullish. You will fib the candle upon which the arrow is sitting or beneath which the arrow is sitting, and you fib it in the direction of the arrow. So if the arrow is bearish, you fib your candle from top to the bottom. If the arrow is bullish, you fib your candle from the bottom to the top, right? So the prophetic candle is just that. It helps you frame out a bias. One of the basic things I had challenge with when I started my trading journey was waking up in the morning, looking at my chart with some wonderful templates I usually have. And the problem is, how do I know what to trade? Should I be buying or selling, right? So, and if you want to look for buys, you will see signals to tell you to buy. If you want to look for sells, you see signals to tell you to sell. Somebody's asking, do you flip the AQZ when you get an invalidation? Yes, we used to flip the AQZ, but we have another modification to the AQZ fib that will not make you to flip. When I get there, I'll show you, and I'll also show the settings. So when you watch the recording, you could always do likewise. Okay, now rule of thumb for trading cryptos is that when you're in a bull run, you're only looking for buys. When in a bear run, you're only looking for sells. And we've been in a bull run for some months now. So I basically do not look for sells. I only look for buys. And I look for buys as a means of farming. There's a concept called farming, right? When you farm something, it's like you dig the ground and place 2 seeds of maize, and your intention is not because you love the ground, is because you want the seed to grow and develop some cobs that will have several seeds in them. That's the concept of farming. All right. So this is a particular one, for instance. Let's give an instance why I look for only buys and why you should only be looking for buys in a bull run is that, especially I'm talking about cryptocurrency now, and even things like SPX 500, NAS 100, and the likes. I'm looking for buy. Like presently, I'm monitoring NAS, I'm monitoring Tesla and some other things for signs of bullishness, and we'll continue our buys. There are lots of news that there might be an economic meltdown soon. We don't care about the economic meltdown. If it melts down, we have our stop loss fixed. We'll wait for the meltdown to round up whatever I want to do, and when the meltdown is done, we will climb up with it, right? And again, every single one of us need to understand that once a while, there has to be meltdown. In fact, if there is no meltdown, we will not be making money off trading. There has to be a meltdown for us to make money. There has to be a pullback for you to be able to buy in a bullish trend. There has to be a retracement for you to be able to sell at a profitable price, that is a discount in a bearish run. So if you look at Tesla, for instance, and you go to the weekly time frame, you would notice this massive dip to the downside. I'm happy with this massive dip because this massive dip is telling me very soon I'm going to have a reason to buy and price will come up above this point. So I'm monitoring it. It gives me a reason to buy. I could grow my portfolio by over 45% trading this dip. Why wouldn't I be looking to sell? Because this thing has been bullish. Same thing with SPX 500. Notice this drop during the corona. See how price came back and closed above the year high. You want to be looking for buys in assets that are perpetual uptrends. You want to be looking for buys alone. You can't predict the sell, but you can almost with certainty predict what the buy will be. Go check SPX 500. Go check things like NAS 100, right? It's been bullish for like forever. Let's check NAS 100. It's been bullish like forever. So I am happy for these drop pullbacks. I am happy for these pullbacks. I am happy for this pullback. So I'm happy with this pullback happening now. Drop to anywhere you want to drop to. When you're ready and give me an AQZ bullish, I'm going to buy. Safe way of trading these things. Same thing with crypto, guys. Same thing with cryptocurrencies. Right? Sorry, did I say cryptocurrency? Well, it's becoming a currency right now, basically. So you only look for buys. So if you have, let's take one. I'm in now. AUM. Sorry, AXM also. AXM, I think. AXM. It isn't. Cryptocurrencies have so many names. Sometimes you find. Let's just pick one. Let me take Koti. Let's take Koti, for instance. Right. So this is Koti. This is the weekly time frame. I had my markups on daily. Right. You see that? Boom, off. Boom, off. Right. So how do you do farming? I was trying to explain that before we move on. So let's say you are in an uptrend. You bought something at $1. You bought it at $1. It's presently at $5. You will still have only one coin. You still have only one coin, right? Now, if you have signs of bearishness, let's say I get a bearish PC, I'll exit at about $4.5. I still have only one coin. When price pulls back, does all it wants to do, and finally gives me a bullish PC, now price is somewhere around, let's say, $2 or $2.5, and I have $4.5 here. So when I buy now at $2.5, I will have about 1.8 coins now because I'm using $4.5 to buy $2.5, it will give me close to 2, which is about 1.8 coin. Now I'm willing to buy. By the time I get back up here, I will still be having 1.8 coin. I have just farmed 0.8 coin. If this price ends up pushing down to $10, if you bought at $1 and you held on to that, only that one, you just have made a profit of $9, which is 10 minus 1. But if I have 1.8, if you get here and it's $10, I'll be making $180. And in that case, I have made $17 profit, right? I would have made $17 profit. This is 18, I mean. I would have made, so that's how you farm. So in a bullish run for assets, things that you hold and keep, not currencies, right? You don't do that on currencies. You want to farm them. And to be able to farm properly, you need to know if you're in a bullish run or a bearish run. All right, so that was just a side note. Let's leave that. If you guys are interested, we could treat crypto some other time. Right, so BTB, what's BTB all about? In a traditional sense, price was coming down, and then price had a breaking structure of some sort. That breaking structure of any sort will give you a bullish prophetic candle signal, right? There are some calculations to getting what these things are, and that is beyond the scope of this discussion. But there are some calculations to getting that. So when you get your bullish prophetic candle, you stage your fib. And you will be waiting for price to return back into your buy region, or if possible, into your preferred entry. Now, when price is returning back into your preferred entry, price will be in a downtrend on the lower time frame. In the higher time frame, you might just see 1 or 2 candles pushing downwards. However, if you go to the lower time frame, it wouldn't be just 1 or 2 candles pushing downwards. What you would see is a downtrend, something like this, pushing down into your preferred entry, right? You would now be looking for a breaking structure in the lower time frame to give you some level of confidence that the buy you are anticipating on the higher time frame is about to happen. When that breaking structure happens, then you would be looking for a retest of the breaking structure for you to now continue your buy. More or less like, like what we have with the traditional LSB or BMS, breaking market structure, right? So what BTB does is that it tells you, it gives you a better entry aside just entering at the retest. It gives you a preferred entry, which is somewhere in between, and reduces your stop loss. And when you reduce your stop loss, what happens is that your lot size increases. So for every pip move, you have the potential of making more money. So that is the concept of BTB. We'll go back now and see how we utilize it. So let's take a pair like EUR/JPY. So we are Euro JPY, and we'll be doing Euro JPY on 4 hours. We'll call up the 4-hour prophetic candle. I think it's on. So we'll have the H4PC. Now watch this. We have the H4PC. I want to see one that gave a very good, okay. So here we have a H4PC here. I hope you can actually see my screen. I hope it's bold enough. So we have the H4PC here, and the arrow is beneath this bearish candle and it's pointing upwards. So we would draw our fib from this point to this point. Traditionally, to be nice to have your magnet, look at this icon here that is highlighted in blue. That is your magnet. You want your magnet on. right? With AQZ, you don't bother about kill zones, right? You don't bother about kill zones. You just stage where you have and take a walk. So if you have this magnet on, it helps you snipe the top of this thing straight to the wick, straight to the wick. You see, if I just take it close by, snap straight to the wick, right? Now, notice this. You had a breaking structure, a pullback for a buy, a pullback for a buy. How would BTB help us take our trade? Now we have, let's do the normal fib. It will be B without stop hunts. Boom, so we'll have something like this. So the first one tapped at TP1, second one tapped TP2, third one went away. Now, the challenge with most people is, how do I get in on this? Now, there are basically 3 methods you could use in trading this, and I'll explain 2 here. The first one is that you could set pending limits. You could set pending limits. If you want to set a pending limit, you know at the back of your mind that price will make a U-turn from this level here. This is your buy zone. The whole of the preferred entry and the top half of the AQZ block, that is your buy zone. Now, you can set your limits. First one at the tip, second one in between, third one at the tip of your preferred entry, and you put your stop loss beneath. If there is a wick, you put it beneath the wick, just some pips, maybe spread times 2. Now, this is on H4. When you do this on H4, you have to be comfortable with having big stop losses. This is Euro JPY. If I measure from this level to this point, that is like 23 pips. Cool. For GU or some other GBP related pair, this could be 60, 100 pips. You have to be comfortable with taking them, right? Then what you do is this. You come here, you go to position size calculator. You go to my FX book position size calculator. And you will decide the risk you want to trade. You want to bear on that particular trade. So let's say we want to risk 1% per trade, right? Let me take this out, just a minute. Take out all of this, and then we'll have lines there that will not be immobile, or that rather that will be immobile. So we'll have this somewhere in between and here. All right. So I want to risk 1% of my account. If I want to risk 1% of my account, can I share this into 3? Yes. I suggest you do this. You use 25, 25, 50, or you do 20, 40, 40, or you do 20, 30, 50. I would favor the first and the last. And I'll show you how you do this now. If you are someone who doesn't usually have so much time on your hands, this is the best way to do it, because you only need to come back to your chart once every 4 hours. Only once every 4 hours. This is a 4-hour candle chart, right? So now watch this. I'm going to come back to position size calculator, sorry. Let's say I have a $1,000 account and I'm willing to risk 2% of my account, right? If I'm willing to risk 2% of my account, 2% of that account is going to be $200. No, that's going to be $20, right? That's going to be $20. So notice this, see this icon, switch to money. Switch to money. I'll switch to money. Once I switch to money, now I'm going to have my calculator out. Now, if you want to be a professional trader and you're not willing to spend 1 minute to do these simple things I'm explaining here, you'll most likely be using arbitrary lot sizes. And there are many of them on the internet. They'll tell you if your account is between 100 and this, use this lot size. If your account is between 100 and this, use lot size. That's wrong. It's not correct. In fact, I'll show you that as we move on. So what do I need to do now? I want to trade with 1K, and I'm risking 2 divided by 100, 2%, which is 20. Now this 20, I want to take 25% of it times 0.25. So for the first one, I'm going to risk $5. So what I want to risk here is $5. Money in USD, $5. It's asking me, so what's your stop loss going to be? So I'll come here and I'm going to calculate my stop loss from this level to this level is about 28 pips. So I'll come here and I'll have 28 pips and I'll calculate. It's telling me if you want to trade, if you want to reach 28 pips, then you should be using 0.018 lot size. I traditionally would just make this 0.01, but some of you might want to make this 0.02. So now we have the first trade going at 0.02. Now let's go back. So you set your buy limit, stop loss 0.02. Next one, from here down, 19 pips. So this 19 pips, calculate 0.026. Again, I'll approximate this to be 0.02. Some of you might want to make it 0.03. It's your choice. So I have 0.03 for the first one. Then the very last one, I'm moving from this level all the way down here, and that's about 12 pips. So I have 12 pips here, but this time I'm not risking 25%, I'm risking 50%, so this amount is going to be $10. Now in this one, I'm using 0.08. So I'll come to my, now I have 3 trades running, right? First, 0.02. Second, 0.03. Next, 0.08. If price comes back, it picks my first trade and moves, I'm going to make some profit. If price comes back, pick the 2 and move, I'm going to make my, okay, somebody's correcting something. I didn't change the currency. That is right. I'm supposed to change my currency here to, oh yeah, currency pair is supposed to be Euro JPY. Sorry about that. Euro JPY. It's supposed to be Euro JPY, right? So if I change with Euro JPY, then I do the same thing I've just basically done right now. So let's go back. So watch this. Why do I love putting the heavy lot down beneath? I love putting the heavy lot down beneath from experience, right? If price pulls back down to this point, 0.08, By the time price picks my trade at preferred entry, by the time price is already getting back here, I'm in massive profits already. By the time price takes 0.05%, 50% of my 1% or of my 2% risk, by the time price moves to this level with the 0.05 already, I am 1% up in my account. It's like you didn't get that. I'll explain it. You have this. This is 0.5 of my account. This is 0.25 of my account. This is 0.25 of my account. By the time this hits this level, I would have done 0.5. I will lose 0.5 of my account. So by the time it moves all the way to this point, I would have made 0.5 of my account also, right? Which is 1% in this case. By the time it moves to my TP1, this 0.05 already has given me 2% of my account since I'm risking 2. This 0.05 alone has given me 2% of my account by the time I get here. These other ones in a particular tribe in Nigeria, we'll call it Jara. It's going to be Jara, right? Additions. So this is the first way you take your trade of AQZ fibs. Now, it's sweet when it hits your TP. It gets somehow when it hits your stop loss. So if the trade moves all the way around, hits your stop loss, sorry for your loss. Change your bias and do exactly the same thing you did in the reverse. Now, there are instances where price will come and not hit your stop loss. Price will just push down and close somewhere here. Now, because you're coming back to your chart once every 4 hours, once price closes beneath and you find out that price has closed beneath, which is an invalidation, you simply do what? Close everything. Now you're not going to lose 2% of your account. You lose just a fraction of that. Now, when you're going for the reverse side, it changes a little. Now price is somewhere here. So what will you have? You set 50% above for a sell limit. Then you set another 0.25 here for a sell stop. Then you sell another 0.25 here for a sell stop, not a sell limit this time. So if price pushes up further, it picks your sell limit, it comes back, picks your sell stop, pick your sell stop, and goes your way. I think I've cleared that up. Enough said. Right, so beat the bank now. That's the last thing we discussed. So we beat the bank, you're looking for opportunities to buy off here. So we're going to go to this date here. This happened to be 9th of February, and this was 23 o'clock, right? So to help us all understand this properly, let me lock that. All right, to help us understand it properly, I'm going to do something here. Look at this. This is 7. This candle on my time there is 7, which means the time we're seeing is the time the candle started, right? So if we come back here, this was the breakout that confirmed the PC. This is 23 o'clock. We will be going to the 9th of February, 23 o'clock, to see when this candle started. It would have started up there. It would have traded down. I will be looking for reasons to buy. So 23 o'clock, 9th of February. So let's go there. I hope my audio is still on. Yep, it is. So 9th of February, 23. Boom, boom. What was that? 23. Yep. And we'll be doing this on 15 minutes. Sorry, 15 minutes. 23, 9th of February. Boom. All right, so that is 23 o'clock, 9th of February. That was when this candle caused the breakout. This is 23 o'clock, 9th of February. You can see it on my screen. And price is trading back down into your buy zone. How would you know to take a buy here? Now, you notice I mentioned that when you go back to the lower time frame, you see a downtrend. Here is a downtrend. Here is a downtrend. Price did a push, a pull, a push. So what are you waiting for? A break in structure, a retest, a buy. That's what you're waiting for. So in this pullback, in this particular pullback, this was the last bullish candle before this low, right? In the pullback, this was the last bullish candle before the low. So what do you do if you want to trade BTB? You simply fib for a buy from the week to this point, right? You fib for a buy from the week to that bullish candle. This was the breakout. This was the retest. That was the buy. Many a times, it could even come back all the way to preferred entry, but we don't know which is going to come back. We don't know if it's going to come back, right? So, but this was the breakout. This was the retest. This was the buy. That's how you treat it with BTB. Now, why are you using this? Price could have done this. Just watch. Price could have done something like this. All the way to your preferred entry. Then do this. Now you fib this region. You're waiting for price to come, and then you buy. You want the buy to start first before you get in. And that is the concept of BTB. So you're waiting for the buy to happen first. So it was selling, gathered momentum, boom, the buy started. You wait for it to come back, you buy. That's the BTB concept, right? So when you're doing BTB, using this, you're waiting for price to trade, you're waiting for the downtrend to reverse. Again, price came the second time. If you want to use BTB concept for this the second time, you wouldn't have gotten an entry because now you'll be fibbing from this point to this point and price went and never gave you an entry. Sorry for your loss. Here, price came straight down. Let's take all of this out, remove our drawings. So in this case, we're going to have from this level to this level, right? Breakout, retest, and it goes. So if you want to use BTB, this is the concept of BTB. In the last session we had, I explained for those of you who want additional confirmation how you could use a popular concept to add confirmation. Now, two ways. You trade off your H4 or you simply trade beat the bank. And beat the bank is basically you're waiting for price to trade down and then you pick. In this case, in this example here, I've removed my preferred, I've removed the H4. Traditionally, this could be a BTB, but this week is lower, so we'll use that. Okay, so if there is any question you could ask me, the last thing I'll say before we quickly run through the charts is alerts. You need to set alerts. And Doug did a very nice job with the AQZ. He gave us the function of setting alerts. Here it's recording. So here you have the H4, right? Prophetic candle. There are some 3 dots here. You could just click on those 3 dots. And when you click on them, the very first thing you find there is add alert on H4 prophetic candle. You could add alerts, and when you, I'll do an example so you see. If I come to my alert icon here, you'll find that I have some alerts that have been triggered, several of them, and I intentionally left them this way so you can see them, right? So I'll turn them back on by just clicking restart, 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 and you can notice it's saying active. When a PC appears, it simply would tell me. So I could use my time listening to Douglas and some other things, and you're just waiting for PC. If you are new to AQZ, I would advise you don't try to identify the candlestick patterns yourself. Then comes confusion. Just use your PC, and the PC will tell you when to do certain things, right? The PC will tell you, okay, something just happened. So you come here, right? 3 dots, click on it, add prophetic candle, add alerts. You find that, so you can add alerts when price is when the alert comes up, when the PC comes up, rather, it will alert you once. You can, if you have a free version, I don't know how many alerts you can set. If you have Pro Plus, I think you can set a couple. Some of us are on premium, so we can set open-ended. And it will, anytime it comes, it keeps alerting us, right? And then you just know that a PC has, you know, been printed, and you're willing to wait for what will happen. Right, so basically, that is that. And I think you just need to apply yourself to it. It basically makes trading a little bit, well, what did I say, a little bit, much more easier. You take your losses with your shoulder high, knowing that you find another entry next time. I don't want this to be too long if there's no direct question. Okay, now I promised I was going to show, do you always wait for price to get to P in 15 minutes of the BTB to pull our trigger? No. You don't have to. You can repeat the same thing I did on H4 on your 15 minutes. You can set 3 entries. You can set 3 entries. There is no rule that price will come to your preferred entry, even on H4, let alone 15 minutes. Yeah, I promised someone I was going to show you that we don't flip our feeds, right? So I'm going to show you the settings now. Again, go through the PDF. Go through the PDF for AQZ. I think it's there. So when you draw your fib like this, there is another one where we'll say fib AQZ both ways. So rather than flipping my fib when it invalidates, I simply turn up the AQZ both ways, and now I have both buy and sell. So if it invalidates, I go, right? And again, you can find the settings. You can find the settings here, right? I'll just scroll through so you can always pause the video and amend yours accordingly, right? So that's it. That will be AQZ both ways. I don't like using it because it makes the chart very messy. In fact, most times I just use entry only. So when I want to decide take profits, I can now decide take profits. So just entry only, and you move on. Okay, I think we're done. AQZ is pretty simple. Every one of us can go to the chart and look for possibilities. Like on the AUD USD, we are having a possible sell scenario here. So we're having a possible sell scenario on AU there. Price broke out, tested our entry. So if you're trading H4, it should have picked your first entry and delivered some TP for you. Right, basically, first entry, TP1, TP2. It's coming back again. Might we get this? If you still suffer from fear, you need to overcome it. When you see a setup, take your trigger. Two things can happen. It invalidates, and then we're going for a buy. I typically will not trade, take a trade, let's say Friday afternoon. I want to enjoy my weekend, but this is Thursday, and we're having a sell scenario on AU. Switch one, Euro GBP. Euro GBP consolidated basically throughout yesterday. Right, so breakout, retest, TP1, invalidated, revalidated. Is it invalidating now? You could wait for this candle to close and make your decision. So basically, I think we'll have to end it here. I don't want this video to be too long, so we can all enjoy. So let's mark up and drop it in the chat box. Have a wonderful day, guys. Bye-bye.